One of the largest real estate companies in India today is the Embassy Group. It was started 3 decades ago by Mr. Aditya Virwani. During this time, Embassy Group constructed residential and commercial real estate and expanded by building outstanding office parks in Bangalore in 2000s. Their first project was the Embassy Golf Links, built on 65 acres in a prime location in Bangalore. And this office park counted on IBM and ANZ as their first clients. As the demand grew, Embassy Group kept constructing more buildings and office parks and now has become a leader in office spaces. Their office parks are set up across multiple cities in India. And not just that, Embassy Group also operates WeWork in India, hotels like Hilton and Four Seasons, restaurants and industrial parks. And joining me is Aditya Virwani, promoter and chief operating officer of the Embassy Group. Welcome to the episode, Aditya.
Thanks for having me, Aashay.
More importantly, Aditya joined the group companies at the age of 25 and took over the leadership role. So it'd be very interesting to hear his perspectives on leadership as well. So let's dive in. So Aditya, most of us know Embassy Group due to marquee tech parks in Bangalore like the Embassy Golf Links. So to begin with, why don't we introduce our listeners to Embassy Group and the different businesses that the group operates in?
Yeah. Well, if I had to explain what Embassy Group is, we are a hardcore Sindhi developer. And most of our focus is office, yes, but you'll see a lot of our business is built around office. So office being the core of our business, housing is actually how we started the business, and as the economy grows, as the country grows, housing and office continue to complement each other. We got into hospitality because of the office space. We keep our hotel strategy captive to our parks. We got into WeWork because it also complements the traditional way we lease office, so a flexible option as well as a hardcore traditional office option like Embassy. And then a few businesses around it, the restaurant business which caters to also the people who live with us, but as India grows, I think the food market is something that's growing. And then also to add to that, we have a riding school, which is an odd one to put in, but it somehow fits in this whole thing. It's a family passion as well. But that's also part of the business.
Well, that's interesting and does seem like you are into multiple businesses, but the core of the group really is real estate.
Yeah.
So I must tell you a fun fact, Aditya. The majority of my professional life has been spent in Embassy Manyata Tech Park, although I changed companies, but then I stayed at Manyata for too long. And that is also one of the reasons I invested in the Embassy REIT, in the Embassy office parks, because I could see the progress in front of my eyes. Also, a quick disclaimer there, I'm an investor in the Embassy REIT, so don't hold me against it. So Aditya, let's talk about your family. Can you tell us what your growing years were like?
Yeah, so I'm a Bangalore boy. I grew up here. My dad comes from Bombay, but he also moved here quite early, and he also considers himself a Bangalore boy right now. My mom grew up here as well. So 3 brothers, we grew up in Bangalore. I moved to the UK for my 11th and 12th. Went to San Francisco for my undergrad. Knew I'd come back to the family business, so I always called Bangalore base and always will call Bangalore home. Came back after I finished my undergrad and got straight into the business. I spent the first 2 years shadow working dad, which was quite interesting because you really learn a lot from absorbing someone, and I think I'm quite lucky to have that opportunity. And you learn things that people couldn't learn in the corporate side. You know, being so close to a promoter, someone who's self-funded, self-made, and I think the real difference in what I could learn is how to do business rather than what is the business. So rather than knowing how many projects do we have, how many million square feet, what is the rent roll, our tenant base, all that's fine. I think it's pretty easy to learn that. But how does one deal with a banker? How does one deal with the landowner? How does one show that you trust someone, but really you know the behind the scenes and you know that he doesn't trust that person? I think those are the kind of things that I was lucky to learn. So spent 2 years with that and then got thrown into the deep sea as the Group COO and now involved in various different parts of the business.
Got it. Fantastic. So you and your siblings are involved in the business, and obviously we have Mr. Senior Virwani, which is Mr. Jitu Virwani, who's been in the industry for so long. So what are the breakfast conversations like? Is there any brainstorming that happens at the table, or do you keep that for specific days in a week?
Yeah, I think now that everyone has their own life, unfortunately, we don't have these breakfast conversations like we did when you grew up in the same house.
Right.
But I think to answer that, I think me and my brothers, and Karan especially, because he's in the business and we work quite closely together and we're 3 years apart, we have a very similar view to the business. And in some cases that's similar with Dad, but in many cases it's also vastly different to how Dad looks at the business.
Got it.
And it's different generations.
Right.
It's different outlooks of business/money, and I think that's interesting. So we often have the same fundamental view of what we should do with the business, which is we are all very bullish on the business.
Got it.
We think that the office space story and the housing story in India is going to keep accelerating as it has for many, many years to come. But we have different kind of ways that we look at it. I would say me and my brother are a little bit more conservative than my dad on the way we look at it, and I see it as a good thing to grow business. My dad might argue differently, but yeah, I think it's, if I had to sum that up, is me and Karan have more similar views,
Okay.
and my dad a little bit different.
Okay. And so you mentioned about your time in San Francisco, so you went there for higher education, is that correct?
Yeah, I went there for my undergrad, spent 4 years there, and it was amazing. I mean, I always knew I'd come back, like I said, but living abroad, and I also had 2 years before that in the UK,
Right.
It really shapes you as a person, you know,
Right.
to be a little bit independent, the things that you miss from that kind of lifestyle, but then there are a lot of things that you miss from the lifestyle you have here in India as well.
Right.
So I always knew I'd come back, but living there keeps you a little independent, you know, simple things like cooking, going to the grocery store,
Right.
doing your own laundry, some of those things you take for granted, and those are the things that you kind of even miss,
Right.
you know. And yeah, so I spent 4 really fun years in San Francisco and then
Nice.
came back here.
Nice. Okay, so what were 2 things that made you stay in San Francisco?
2 things that I enjoyed in San Francisco that I would say you don't have here. One would be the independence. I think, you know, the simple things of, like I mentioned, you know, buying your own groceries, coming back, cooking, having those kind of nights. You know, unfortunately, I don't do it as much over here, and it's probably not as easily accessible.
Right.
And then also the fact that no one really knows you there, so
Right.
you're allowed to do whatever you want without feeling the responsibility that someone's watching you or someone knows who you are. I think that's something that you know, people take for granted, and
Got
the
it.
luxuries of being
it.
there.
Got it. Understood. And what were 2 things that made you come back?
Well, the big thing is, you know, knowing that there's a massive opportunity as India, and the growth is here, and you'd be foolish to be over there,
Right.
especially if you have a setup. So the other thing is, of course, the family business. You know,
Right.
I knew, and I always wanted to come back here and grow this empire and add my value to it, and build a legacy within real estate, within Embassy, for the next generations, for my kids as well, and keep growing in India. I think that's such an exciting thing,
Right.
as a youth, as an Indian. So it was very natural for me to come back.
Got it. Got it. And did your stay in San Francisco change you as a person or as a leader? Do you see that when you look back?
Yeah, I think it did. I think every experience in anyone's life shapes you up a little bit. And what I take from there is learning to be independent, learning to go into a new environment, meet new people. I think, you know, life is not how smart you are, but how you build relations, how you connect with other
Right.
people. And I've been in various different schools, even before San Francisco. So getting into a new environment and meeting people from so many different backgrounds, there's so much to learn from everyone.
Right.
I think that was the biggest eye-opener. You meet people who are very middle class,
Right.
who you think are, you know, they look at things very differently to how you look at. You meet affluent people, you meet other foreign kids from other wealthy or not so wealthy backgrounds.
Right.
and it gives you a very good perspective on life, and I think that's important, and it influences a lot of your life as well.
Right, got it. So let's talk about post-college and your transition into the Embassy Group and becoming the Group Chief Operating Officer. I remember you mentioned that in the initial years you worked as an executive assistant to the chairman. So what was that phase like? What were the key learnings that you had during that phase?
Yeah, so like I said, I spent 2 years shadow working,
Right.
and my brother followed the same kind of path. I think it's fabulous. I think I'm going to do it for my kids as well. There are moments in that where you're a little frustrated because you're really just sitting and absorbing, and I'm not allowed to ask questions during meetings. I get my time after work where I'm like, hey, why did you do this, or what's happening here with this project, and
Right.
why are we meeting him? But learning, the behind the scenes of the business is fortunately for me something that no business school, whether it's Harvard or Stanford or anything like that, can ever teach you. It's pure experience, and I feel, today, standing 6 years in the business, so confident in the knowledge that I have of the business and
Right.
where I want the company to be.
Right.
And a large part of that learning was in that 2 years. My learning curve was so steep during that period. So 2 years of shadow working is such a amazing philosophy. I would recommend it to any promoter who's trying to bring their next generation in.
Awesome.
It's a fabulous way to learn the business.
Fantastic. And here's a deeper question, right? So during this transition phase, were there times when you felt anxious or stressed, and how do you deal with that?
Yeah, definitely. I think maybe the right word would be overwhelmed. You're 22 years of age, you join a family business, which is quite large. You know real estate because you've grown up in a family that's hardcore real estate, but
Right.
of course you're just getting in the business and meeting people internally, externally, and the amount of information load is a bit
Yeah.
overwhelming, and you kind of some days go back home and you sit back and think that, hey, am I ever gonna know everything, and am I capable of running this massive business at some point in your life? You kind of doubt yourself, of course. I think the most important thing is to kind of block that out and have that confidence in your abilities and in yourself. So I think that's a really key mental thing that any entrepreneur must have, is to believe. And it definitely is overwhelming, and it's big shoes to step in as well. There is pressure,
Right.
but you just got to embrace it, and you have to believe. And I think that's what I've been doing. And I sit here 6 years today, really confident in what I know about the business and where I want the business to be.
Right. No, you definitely sound confident off camera and on camera as well. So I know where that's coming from.
Thank you.
So I was listening to one of Mr. Jeetu Virwani's interviews, and he talks about how his journey as a young real estate developer in the 90s in Bangalore, and he talks about how he was different in his style compared to the previous generation.
Yeah.
When it comes to the way, when it came about aspects like managing relationships with clients, with customers, and how his new way of working in the 90s made Embassy a sought after real estate company.
Yeah.
So now we've come full circle, 30 years later, you've joined the business and you've taken charge.
Yeah.
So how is your leadership style different from Mr. Virwani?
So I would also say that about myself, that I am a little bit different to my father's generation, and he was definitely different to the generation before that. I would say he was a little bit ahead of his generation. I think the business has changed. I think from back then, and India has changed as well. Back then, the ticket sizes were smaller, the tenants were leasing smaller space, which at the time was quite big. 100,000 was a big deal at the time.
Right.
Today I'm looking at the deals in the market, and $1 million is kind of small.
Okay.
But at the same time, there's institutional capital pouring into India, versus back then he would show an investor an HNI, a land, no approvals, no land documents, nothing, sell the story of future built up space, take the money, build it, clean it up, and then strata sell it. I think nowadays it's completely different. You have massive funds, huge, the biggest funds, Blackstone, Brookfield, Ivanhoe, Cambridge, pension funds directly coming into India and doing development. So the scale is different. You know, it's not the back in the day where you can raise a 30 to 40 crore check. Now people want to do 100 million. So, and the requirements are different. You got to have land cleaned up. You got to put everything in for institutional investor. So I think recognizing that change and how India is moving towards a more institutional grade of asset class, and how that reflects to also how we build a team. You know, I think I want to build a very good professional team under the company for various gamuts of it. Investor reporting, you know, we have 2 public companies now. We're going to do a merger very soon. So we're going to have 3 companies, how we're going to run that, and then future do even more IPOs within the larger group. So I think my leadership is more organized, I would have to say.
Okay.
Not that that's a bad thing. I think Dad being self-made is a little ad hoc kind of an entrepreneur. I think I see myself as, you know, we have a solid business, a great moat around it, and just grow it very consistently but compoundedly. And if you just do things by the book, I think our brand name is solid enough to really milk the opportunity in India you have today. So there are similarities for sure, but there are also these small differences that the generation gap, I think, brings in.
Right. Understood. Got it. So let's move to some questions around the residential business, right? So what's your pulse of the residential space in India? Where do you see it heading, say, 10 years down the line? And the reason I ask this question is because people in the 20s and the 30s are now debating about owning apartments versus renting apartments, because with the pandemic, everybody got pretty serious with their personal finance. So what's your take on that?
Look, housing's always going to do well, and especially in a country where you have such a high rising middle class and such a high urbanization rate. I think like 32 million people are moving into cities every year. So housing, everyone needs a roof over their head. And as everyone's income goes up, I think that housing pricing also goes up. So housing does go through cycles more so than office, I feel. And we've had a good cycle right now. Rates have been low, rates are going up a little bit, but I still do think that demand will outpace supply. There have been some pressures on input costs. So housing's in a good place, and we'll always be betting on housing. That's how the company started.
Okay.
But you're right, by the way. You made a good point. Is I do think, and you see this a lot in the West, you see this with the younger generation, that yes, people will want to rent more, especially now when pricing is going up. So I do think that India will evolve into a rented housing market. We're doing something in that space as well. The problem that we've had historically is that land cost is so high because people peg land cost to commercial yields, and landowners have that expectation. We don't have the best zoning laws like you do in the West. You can pretty much build anything anywhere. Of course, there's some neighborhoods that are low rise and you can only do residential historically. But mostly land cost is high, and there's not that much you can engineer your construction costs to. And then on top of that, people build quite large. So if you're trying to make a rented yield work today, it doesn't make sense. Your yield is going to be far lower than your cost of capital, and that's just a mismatch. But I do think as you densify spaces and as the demand for rented housing goes up, I do believe that India will move towards a rented market. 3/4 of the REITs globally are all multi-family, single-family rented housing. So I do think that there will be some rented housing REITs here, hopefully soon in India.
Okay, that's interesting. That's an interesting answer. Because everybody symbolizes REITs with office space. So it's interesting to hear this aspect of it as well. And I think since we spoke about the REITs, I was doing some research last weekend for our interview, and I found that Blackstone, which is the world's largest landowner, they've shifted their focus in the last 10 years from office spaces to areas like warehousing, data centers, and even properties like senior citizen housing. The Embassy Groups also operates the Embassy Industrial Parks. So are you seeing that your capital allocation in the last decade to now is also following a similar pattern?
You know, it's interesting, and Blackstone are massive in warehousing, right? It's their biggest asset class in their portfolio, and it's driven by the whole e-commerce boom, the whole demand from moving digital,
Right.
especially when it comes to retail.
Right.
We actually built a business, Embassy Industrial Parks. We actually sold that to Blackstone
Right.
during COVID, and we like the business. We got a great valuation for it. It was a really good business for the group. We partnered up with Warburg Pincus, another private equity fund from the US. And what we see the difference in warehousing / industrial in India versus the West is that in India you have abundance of land, and the barriers of entry in that asset class are very low. So just to give you an example, to build another Embassy Manyata is virtually impossible, where you have 2 hotels, you have a convention
Right.
center, sports zone, food courts,
Right.
grade A office space, flyovers coming in, infrastructure.
Right.
I mean, it's just phenomenal. But to build a, Bilaspur or Farooq Nagar warehousing park that we did, it's very easy for the person next door to build these, plain boxes and put
Right.
some infrastructure, and people are doing it. So land prices are historical. They don't really have a yield to beat. And for the tenants, it's largely domestic tenants. Of course, Amazon's a large international tenant in the space, but they're not putting people in that space. They're really not many people. It's a lot of racking, a lot of storage goods. So after rent reaches a point, it's very easy for them to move on to the guy who there's not much loyalty in that
Right,
space.
right.
Whereas with an office, there's human attachment. You mentioned that you've worked in Manyata and various different jobs, so you obviously have an attachment with the park. So it's very hard for Lowe's or Target or any of those tenants in Manyata to move out of the space. It's different with warehousing,
Right.
and I think it will evolve. I think as you do more last mile warehousing, you can increase rents far more, but it's a little bit of a tight game. And when we look at our capital allocation as a developer, our pockets are not as big as a Blackstone, and we're not raising this kind of LP capital
Right.
like they are. We're not a fund, let's be honest. And we need to say, where can we deploy capital the best? We have to look at opportunity cost. And when you have such good fundamentals on office, and the yields on office make so much sense,
Right.
and we know the market so
So
well,
well.
you have a REIT, you have the DevCo as well that's fueling the REIT.
Right.
It's just an obvious choice to continue putting money back into office, residential, asset classes that we know, understand, and making the highest margin.
Right.
But we have our eyes on the warehousing. I think we're waiting for it to evolve a little bit more
Right.
and approach it with a different strategy and partner up with the right fund who's aligned with us. Because there are places you can deploy capital and make a decent return that these funds are very happy with. And the macros are great. E-commerce is just growing phenomenally. You see
Absolutely.
that trend in the West, and it's happening here.
Yeah, got it. Since we were talking about REITs, why don't I take this opportunity to talk about REITs? So REITs are real estate investment trusts, and to make it simple to understand for our listeners, a REIT is basically a company that owns and in most cases operates income producing real estate. Now these are listed entities, and for a retail investor it provides easy liquidation of investments in real estate market, unlike the traditional way where you go and buy a piece of land or commercial property and then you build it and then you rent it out. So now REITs have been there since 1961, and based on my quick research, about 39 countries have REITs now. And Embassy Office Parks was the first REIT in India, and you are on the board of the REIT. So in terms of numbers, do you see retail investors now being more engaged in investing in REITs?
100%. I think our retail investor base has already grown tenfold since
Wow.
inception. I think we have roughly 20,000 retail investors in our portfolio today in our REIT. And I think it just requires a little bit of time. We listed in 2019.
Right.
It's been 3 years. We
Right.
had our third year AGM, or fourth AGM
For the
rather.
AGM, yes.
And I think it needs a little bit of education.
Right.
Because from an investor point, it's such a great product.
Right.
I mean, you can buy a piece of real estate for a really small amount of money.
Absolutely.
It's a hedge against inflation. It's a dividend and equity play. So you
Right.
have a committed dividend as well as the share growth, which is again, very predictable, super tenants that are escalating rent. You have opportunities of new leasing. You're seeing a backlog of people coming back into spaces. So for me, I just can't fathom and understand why investors, retail investors, are trying to buy strata space when you can buy a REIT, which is liquid. You know, that's the biggest advantage. It's the volume and what it's trading. It's extremely liquid on the stock market. It's a diversified portfolio. So if that building is empty, you're still getting rent from the various other
tenants,
the various other assets across the country. So it's a hedge against each city as well. If Bangalore's not doing well for some reason, you know, Pune is doing well, and vice versa. So I do think it needs people to be more aware of what a REIT is, how it works, and I think you'll actually see a lot more REITs in the market as the years go by, and far more retail investors come in. You know, as these get included in indexes, as we reach a certain market cap, the volume gets traded much more as we keep putting in more assets as both sponsors, Embassy and Blackstone, in our REIT. But you know, I have to commend the other REITs out there as well, Brookfield and Mindspace, both good assets, good potential assets to put in as well in their REITs. So it's an exciting time, and it's great for the retail investor, especially now where you should be hedging your bets with inflation. And in a very volatile market or in a bear market, a REIT, you know, and it's reflecting. Our stock prices have been doing well recently as well.
Yes, absolutely.
So I would highly recommend it for a retail investor.
Got it. And in terms of REIT, there are two ways you benefit, right? One is that you get the rental income in form of based on the number of units that you hold. So those dividends come in, and fortunately, I think that's happening every quarter now instead of a year. So that's one benefit. The other benefit is because it's traded on the markets, the share prices can appreciate. So you kind of make money due to that as well. So for a retail investor, they can make best of both these scenarios. So do you see investments in REITs in some ways being an alternative to the traditional fixed deposit in banks?
I think so. I think because of the nature of how safe those tenants are. You know, really, you have to look at the portfolio. What are the assets? What are the tenants in there? Because these tenants are living by their contracts. And just to give you an example, during COVID, you know, when everyone scattered away from offices and started working from home, lockdowns, etc., this is like the most extreme moment where a REIT could be at risk. But we had 99% plus collections in our REIT. So even though these companies were not using the office space, they value that contract so much because they invest so much technology costs, fit out costs in their spaces, that for them to breach that contract and not be paying their rent on time is extremely risky. So, I mean, that's the most extreme example, and REITs withered through it, and our rent collections were 99% plus. So it's really a no-brainer to look at a REIT over fixed deposit and park your money there. It's governed by SEBI. You have to do quarterly payouts. And yeah, you're right. It's also very tax efficient. We don't pay tax on the dividend. The government is trying to promote the REIT market as well, which is helpful. So absolutely, it's a hedge against your fixed deposit, but more importantly, against inflation.
Got it. And I was actually looking at some numbers, and I found that Singapore actually has about 40 REITs listed on their stock exchanges, which is a lot. And I'm sure this story is going to unfold in India as well as we move ahead. So a sub question here. So which countries do you look at to study patterns in real estate? Because for tech, it's San Francisco, it's Shanghai, it's few other cities in China. For fashion, it's cities like Paris, New York, Milan. So what about real estate? What's your reference point?
I think there are a lot of dots to connect and different cities to look at in different ways. We call ourselves the Silicon Valley of Asia, and Bangalore being the heart of it. So there are some similarities with, I guess, the Silicon Valley, the Bay Area, where there's so much tech growth happening, and the same's being replicated here. But one example I would give you is China, and more because of the sheer population and the similarities we have with China with population. So we just opened 2 Hiltons in Manyata, one Hilton Garden Inn, and we had Alan Watts, who's I think the Asia APAC president for Hilton, and we were having dinner right before we opened, and he was talking to us and congratulating us as embassy, because in India we are the biggest owner of Hilton hotels. We have 3 operational and 2 under construction, so 5 Hilton hotels.
Wow.
And he was mentioning to us that, in China, the top 5 developers, one of them, he's signing 1,000 hotel Hilton deal with them, or they have signed. And this is all kind of brands. So the Garden Inn, the Hampton Inns, the Conrads, the Hilton, they have 15, 16 different brands. And those developers churn out 30 to 40 Hilton hotels every year.
Wow.
Right? And of course it's China, and we can't really believe what happens there. But what I'm trying to get at is urbanization.
Right.
He said what's happening in China will happen in India. What happened in China in the early 2000s is happening to India today. So as people move from villages into metros, into cities, they're going to grow.
Right.
And the sheer population, the rising middle class, is a huge sign that people need real estate, whether it's a hotel, whether it's a residential, an office, warehousing,
right.
People need it. So I would compare us to China, and I think that what's happened in China will happen in India.
Got it. By the way, you spoke about the Hilton properties in Manyata. That's about 620 rooms, both the hotels together, and I think right now is one of the largest in Asia in terms of the office space, in terms of the integrated office parks.
That's right. And the convention center that we have 50,000 square feet plus.
Wow. Yep. So that's where we had the AGM, and it was wonderful. So I think let's shift gears a bit here, and let's talk about WeWork India. I know your sibling Karan, he leads WeWork India as its CEO. And before I ask my question, I've got a nugget of information to share to all our listeners. I was curious to understand what numbers WeWork India was doing, and I stumbled upon the fact in the quarterly WeWork report that India and China are the only markets that are franchised and not owned by WeWork Global. So they never publish any numbers. Is that correct?
It is correct. We started off the business as a franchise model where we owned the business here. We put in all the money, and we were paying them a branding fee, you could say. And now, actually, during COVID, WeWork Global had invested 100 million with us, and they converted that to equity. So they do own 27% of the business today.
Got it.
So today it's more for JV.
Right.
But yeah, we had self-funded the business. Nice. It's a very complementary business to the traditional space.
Absolutely.
As there's some clients who want a 5-year, 10-year lock-in, there are also some clients who want that monthly or per year flexibility.
Right.
I think that's where the synergy plays in with WeWork and our traditional office story.
Got it. So tell us the story of how you brought WeWork to India. How Embassy got WeWork to India.
Yeah, so it happened at a time where WeWork was having a lot of success in the West. They came to India, they did a mandate, they met various different developers. At the same time, we had one asset, which is Embassy Galaxy on Residency Road, which we originally built for a mall, and we didn't really see the traction that we had hoped. And at the time, my brother was in the business, Karan, and he was looking at this, and kind of at the same time, WeWork was exploring India, and we were seeing how can we monetize this asset. This was one asset that they really liked. We met with WeWork. I think we hit it off immediately. It's very similar. Like we're Sindhis, they're Jews, so very similar kind of business mindsets. And things just clicked. And we said, hey, let's do this. We believe in the business. They brought us to New York. They showed us the space.
Wonderful.
Karan led that. He just finished shadow working with my father. So this was a perfect opportunity for him to take and grow within the group. So. It just kind of all fell into place, and we're very proud of the partnership with WeWork, and we actually think that WeWork might even be a larger absorption at some point than the traditional office space story that's happening here.
Absolutely. I had taken a 1-month membership, and I could see that a lot of offices have shut down their permanent office spaces. They've given membership cards to their team members, and they are swiping in every day, and having meetings there.
So Karan told me that he had a better March 22 than March 2020.
Wow.
So pre-COVID, March 2020 in India.
Right.
So his March 22 numbers were much better than his pre-COVID numbers. So it is one of those businesses that was affected, no doubt, during COVID as people went back. But as people come back into spaces, this is really what they want. And I think it's 26%, I was looking at a report, 26% of the office absorption that happened last quarter was in flexible workspace, which is amazing.
That's brilliant. And I just want to tell our listeners that globally, if we talk about WeWork Global, WeWork India is the only entity that has turned profitable. And what needs to be highlighted is that WeWork India also saw the pandemic come through, and yet, correct me if I'm wrong, Aditya, it turned profitable in Jan 2022, is that correct?
Yes, you're right. It turned profitable early this year. And I think also WeWork Global have had their moments of profitability. It really depends on occupancy. I think now is a time where people are back in spaces and you're seeing the model work. So you're right. It is a profitable business. We're trying to churn our cash flow. And I think it's a really key moment for us this year to do that.
Fantastic. So let's quickly touch upon co-living as well, because that's one space that you have entered in. Do you see this business will gain momentum? How are things going there?
With co-living, back to our earlier conversation, is we really looked at how can we make rented housing work in India. And the trendy word for it is co-living, but really it's rented housing. Because you have so many people working in your office spaces, and how do you then cater to these average techies who are making, call it 5 to 10 lakhs, 5 to 12 lakhs a year, the masses, right? And how do you cater to them? A lot of them stay in PGs, they're unorganized, they're filthy, you deal with unhygienic conditions, with landlord problems, with roommate problems, deposits that you don't get back, high deposits, 10 months in Bangalore. So there's so many problems to solve within that space. And that's how we approached the business. We met a really interesting guy, Karaman, a Turkish guy who ran a student housing business in Turkey, which is a big student housing market. And our paths kind of aligned, and we said, let's do this in India. Let's go out there and build organized PGs and call it co-living, but really it's an organized PG, and rent it and complement, again, back to my earlier point is, all our businesses revolve around the office absorption story in India as being the fundamental part. So that's how we went out with the business, building to our design. I think the opportunity that we're seeing now is what we stayed away from earlier, is going into other people's assets and then taking their spaces and managing it for them. I think the reason why we stayed away from it is a lot of those operators were going in there and committing high rents, high deposits, spending on capex, and we just didn't find that model sustainable. It was a high burn game funded by large funds, and you know who some of these operators are, and you're seeing it's not sustainable today. But the way we approach that model is we said, let's approach it like hospitality. How Hilton and how Four Seasons is an operator with Embassy, where they make a base fee and an incentive fee, and they don't commit us room rents, they don't pay us a deposit. In fact, we pay them a fee. I think that's the difference that we're trying to bring into this asset class. Is it is a hospitality asset class in a sense. So if we're taking someone else's asset, it's their asset. They should be spending on waterproofing, painting, things like that. That's going to stay with them. It does require a bit of education, but we've been able to do it. We've been actually able to provide them higher returns in this model than they were making in a fixed rent operator model. And we're seeing success. So we have 16 buildings today and 1,500 beds, and we're trying to grow that business organically, sustainably, the Sindhi way, cash flow and cash flow positive, and not trying to play a huge valuation game that we've seen in the past with some companies.
Got it. So it seems like the momentum has been great in this sector. This business.
It has. I tell you, as migrants come back into cities, as people come back, as cities start waking up again, it's been really promising. and something special is happening with that business. So we want to do more. We're seeing success with this management asset light model, as well as we want to build out the build to spec. So we have our first building in Whitefield that should be ready by end of the year.
Wow.
And we'll see how that space operates. We'll get a sense on price discovery. It's a new asset class.
Right.
People don't really know how much they should be paying for it. We learn things about OPEX, how can we operate the building efficiently before we go out in large scale and build a bunch of these next to or within an office park.
Got it. Got it. That's an interesting answer. So I'm going to ask my next question in two parts, and it's to do with the hospitality business. Let's start with restaurants first. You operate restaurants like Sanchez, Sriracha, and more in Bangalore, and you also have a stake in Hard Rock Cafe in India. So what were your learnings from the restaurant business? What were the challenges? Because this is not a business that you were always in, but then entered this business in the last 10 years.
Yeah.
So let's talk about what challenges you think are there in this sector as of now.
So these are the businesses that are non-real estate, but in some way they're connected to our real estate businesses. They cater to the people who we sell houses to. Some of these outlets are in tech parks. But it is a different business to the hardcore real estate. It's a tough business for sure. You have COGS that go up, you have labor costs that go up, rent that goes up, but in an economy or in a city like Bangalore, to take pricing up is really difficult. So it's a challenging business, but it's a business that we see that as, again, the middle class is growing, wages are increasing, consumer spending is increasing, our culture's changing quite a bit, from the last 10 years, and that's going to keep happening. So people are going out there to experience new cuisines, people are going out there to buy alcohol and buy drinks when they go out, spend a little bit more money and not just save like our Indian mentality. So I think that's the fundamentals that we do believe the restaurant business will evolve. And again, it's a trend that you see in the West that is going to happen here and it's happening here. You see in Bombay already, people do that. People spend money, people dress up and go out. I think, Bangalore is maybe 1 or 2 steps behind, but we'll get there. So we want to keep growing those restaurant businesses. We have some pretty interesting chains and a wide variety of different cuisines as well, and a good team. So we definitely want to keep, we're quite bullish on that business.
Right. And I just noticed while I was asking you this question, all of them are non-Indian cuisines, the ones that are served in your restaurant. So obviously it was a big bet, but it's good that you had all of those learnings from the business. So just a sub question, right? So we know the cloud kitchen story is evolving now, and we have cloud kitchens almost everywhere. It's not a game of a large entity running multiple cloud kitchens, but even smaller players are coming into the market and opening cloud kitchens. So do you feel that cloud kitchens are here to stay? Do you see that business being continued in the next few decades also? 100%.
I think COVID's also accelerated that people are even more used to ordering online. We ourselves pivoted a little bit and have a few cloud kitchen businesses too, under a few brands, and we're trying to centralize kitchens and monetize spaces more efficiently. So I think that's essentially what cloud kitchen is doing. You have some centers that are pure pledge cloud kitchens. People are building these spaces. Swiggy's are doing multiple tie-ups, which is great for operators and other brands. We actually are looking at cloud kitchens in a pretty interesting way in new tech parks, where we can have cloud kitchens within the food court. So people can then have a variety of different food. So you tie up with a cloud kitchen operator who has 8 to 15 different brands, and you're then able to offer people more variety, as well as then have that as a profit center for them, so they can cater to the vicinity. So I think it's interesting, and I think for a real estate player like us, how can we plug it into some of the developments that we're doing? I think the cloud kitchen business is here to stay and is going to grow quite fast now onwards.
Got it. And I think that's an interesting idea, where you are going to lease out space to like a cloud kitchen operator who operates multiple brands. And I just thought about like Rebel Foods, because they have Fasos, Behroo's Biryani, the Oven Story. So be interesting to see how they can operate in a scenario like that. And they are also known for like quickly cooking, packing food, and obviously the shipping is going to be probably lesser time if the cloud kitchens are in office parks.
Yeah.
Interesting. So now let's move to hotels, because we spoke about restaurants. So let's move to hotels. You operate Hilton at the Embassy Golf Links, also at the Embassy Manyata, where it's 620 room, 2 properties. There's also 4 Seasons at Embassy One in Bangalore. So will you continue this momentum? Would you continue to have hotels as properties within the office parks?
Yeah, I think that will continue to be our strategy, is have hotels as a value add amenity to the office park. We're doing 2 more Hiltons in Embassy Tech Village, which is the same kind of concept we did at Manyata, where we have a Hilton 5-star and a 4-star Hilton Garden Inn to cater to 2 different types of
customers.
People.
Yeah.
But we really do see hotels and hospitality in India as a value add to a business park. You know, on a yield on cost basis, if we were to build an office building there, the office building would make far more return than the hotel.
Yeah.
But at the same time, because we have those hotels in the parks, we're then able to drive rents up all in the other buildings. So, you know, if you look at return on money, it does make sense to have the hotel as a value add, like a clubhouse in a residential complex, you can say. I think this is something that we're going to continue. We're watching the space, and as you now do see a little bit of hit on supply, and you know, not many new hotels are going to come up in the next 5 years, I believe, with costs going up. I think room rates have to go up. You know, in inflationary times, all asset values go up, and that's hotels included. So as hotel room rates go up, and if you're able to build hotels more efficiently, you know, we have so many learnings that we've had that we're going to keep replicating in our next asset. If it does make sense, of course, we would do the standalone kind of model. But for now, the way the dynamics are, the way the unit economics are, it's going to be a strategy that's going to be captive to the business park as a value add for us.
Got it. So these are more complementary properties, right? Having office parks and hotels together.
Exactly, yeah.
And from a hotel standpoint, that's something that you were just saying that's something that's not on the radar. But what would be like a limiter for you to have a standalone hotel?
What would be a limiter in the
like
sense?
in the sense of if you were to think of building a standalone hotel, which is not in an office park, why would you not do that if there is an opportunity to partner with say Rosewood or any of the other leading hotel chains across the world?
Well, I think the opportunity there is to buy the hotel at lower than the cost it took to construct it. So lower the input cost basically. So really, you know, the second or third hotel buyer is the one who makes money. Buying a distressed hotel, that's the opportunity in India. I think building a standalone hotel, unless it's a resort and you're really able to command a significant room rate, is the unit economics just don't stack up, unfortunately, today.
Got it. Okay. And let's move on to some questions around you being the group CEO. So what are the areas of your business that you've been focused on and have been spending most of your time lately?
Well, lately we're going through a merger. So we have one entity, that's the REIT, that's the stabilized assets, JV with Blackstone on that. It's a public entity, of course. And all our rent-producing assets will continue to sit in that on the office side.
Yep.
And now we're doing a merger on the DevCo side, which is with India Bulls, which is public knowledge, and with the fag end of it. And that essentially will be a public listed entity, DevCo, that on the office side, we continue to fuel our development and then exit it into the REIT. That's going to be our strategy. And then on the home buyer side, on the residential side, we would then exit those assets to the home buyer. So getting that entity ready for the merger is pretty much the main focus of the company and myself right now. There are a few things to do before that and clean up. So I think that's a super powerful structure that really no one in India has, where you have 2 mega public listed entities, strong balance sheets. We know that if you actually deliver a product, it will sell. And if you're able to deliver office space, it will get leased out. It's very simple, the business, to be honest, and we have all the right ingredients. So just putting it all together and, you know, executing to the right quality I think that's the main thing about this business, and that's what I've been focusing a lot on. Is on the development side, is getting this company ready so we can go out in the market and execute on some really meaningful projects and continue our strategy essentially.
Aditya, I mean, if I were to look at the number of businesses in the group, I sometimes wonder, as Group COO, how do you manage to keep up with the pace and progress across different verticals?
I have to say it's the team. You know, we have a really good team that's running various different verticals, and each of them do an incredibly good job. And as we've evolved as a company, we've also upgraded talent, we've got new people in, and we'll continue to do so and keep building that team. There are various different verticals within the group company. You have the REIT, professionally run team, externally managed. You have Embassy Services that in its own right is a pretty large company within the group. You have Embassy Developments Limited, and we've identified a CEO who's going to run that. So we have a really professional team. Deep down, we are always going to be a family business because, you know, promoter face value is huge. You know, a tenant, a banker, a landowner wants to deal with someone who's going to be there forever. But at the same time, you have to recognize that a lot of these professionals are smarter than you and will be smarter than you will ever be. And putting them and using them in the right places is really the strength of the company, and that's how we've had so much success. Giving them the freedom to run, let them make the decisions, and have an overarching view of the business and how things are run. Focusing a lot on culture. I think that's the role of a promoter, and that's what we've been doing.
Right. So you spoke about like, you know, being updated. So do you, like, you know, are there avenues in which you get to know what are the daily updates that are happening across the business? Do you use dashboards, reports? How does it work?
Yeah, it's pretty structured. We do with different businesses, different review meetings, different management meetings. We do have dashboards, so things that we have to track more frequently, like sales, project spends. We have a really cool dashboard that everyone has access to. So mostly reviews, and of course, you know, getting into the nitty-gritty of why is a project delayed is always fun as well. And we do that on an ad hoc basis, but we have a pretty structured plan on how we review businesses.
Got it. And are there any businesses that are stable where they are in an autopilot mode where you need absolutely little monitoring? Are there any business verticals that are currently in that state?
You know what? I would say all our businesses have reached that point of autopilot. Maybe the newer ones need a little bit more focus and attention and help. But most of those businesses, if you look at the REIT, is full on autopilot. ESPL, again, Embassy Services, full autopilot. We are doing a merger, you know, with India Bulls that I mentioned, and that's going to be a Lisco in itself, and Embassy Developments Limited. So there, of course, we need to get that done. There are a few things that, you know, there's a whole HR exercise of integrating two teams. So I think that's going to be a big focus. But once we get that up and running, you know, that's going to be on autopilot. So just to answer that.
Got it. So lastly, who do you look up to, and who do you drive inspiration from, whether it's a business personality or somebody from the sports? Is there anybody you look up to?
There are quite a few, and it'd be hard not to say also my father in many ways. I do look up to him from a business point of view, how he grew the business, and his general outlook on life, his positive mindset. He's definitely one, but there's so many, whether they're businessmen, sports people, you know, Tyson Fury, anyone really who has a positive mindset. And I'm a big believer in the law of attraction, and if you can believe in something, it will happen. And just being positive, a lot of sports personalities have that kind of mindset, and you see those success stories. So really anyone who has a positive mindset and believes in themselves, I do look up to that, and there's so much inspiration to take from that.
You do get gravitated to them.
Definitely. I think that's something that there's a charisma that attracts everyone to that because of how confident they are in their abilities. And that's something that I try to rub off on myself, and the countless number of people that have taken a little bit from everyone.
Yeah, and it does show, by the way. So you do, are quite confident and cool. So I think that's definitely rubbing off on you. So with that, I think we come to the end of this episode. So fantastic. So thanks a lot, Aditya. This was a brilliant conversation, and I hope that you like this conversation too.
Yeah, thank you, man. It's been fun. Thank you so much.
Thank you.